All right, good morning, ladies and gentlemen. This is going to be a fairly long video, so I'll go straight right into it. And just in case you're wondering, where are my slides? Why have the slides gone to? Market is so volatile, the NGX is so volatile right now that it will only be fair for me to go deep into some technical analysis. So the slides will come back on Monday. I just thought to take a break. We are in such a volatile market. So many buy and sell opportunities. So many bears remain in motion. So it's just thought to say, let's leave the slides and let's go look at some numbers. And let's get into some nuts and bolts. But as always, please note, nothing I say, nothing the team says, nothing you see on the channel in some is investment or trading advice. Go do your own research. You should not base your investment decisions on what people say. It's not even myself or anybody, because ultimately you are the captain of your portfolio. Investing is like an iceberg. You see the surface, there's the bottom. So let's go into start with Wema Bank, and I'll be doing fundamentals and technicals. Technicals all say sell. I'm looking at 3 stocks. I don't have the time. Okay, 1 minute in. I should wrap up this video in 5 to 6 minutes. Technicals all say sell. I'm looking at Wema, I'm looking at Oando, I'm looking at Zenith Bank. As Zenith is on my radar. Tier 1 bank, trading well below book value, and I'll explain why. So you can see the technical analysis for Wema. Say sell. Everything, moving averages sell. Moving average are what I tend to use. If you look at RSI is neutral though. MACD says sell. Let's look at the averages. Okay, some of the moving averages, 5 and 10 day averages say buy, but I think those are too short. But if you look at your 20, 50, 100, 200 day moving averages, they all say sell. But let's look at the stock fundamentally speaking. And let's see if we can quickly dive into it. Worst case scenario, I'll take only 2 stocks. And maybe sometime in a week or 2 or whenever, maybe next year, I'll go look at the others. So Wema Bank, what do we have? Let's look at the Q3 numbers. And we can do PE ratios, and then we can do price to book value. So 9-month numbers for Wema Bank. What do we have? Profit of 127.4 billion. Earnings per share. This is like 7 naira 38 kobo in earnings per share. What did the stock close at yesterday? A stock closed at 19 naira 25 kobo. So you do the maths. Let's calculate the maths. 19.25 divided by 7.2 means the stock is trading about 2.67 times earnings. I think that's, from a price to earnings ratio, that's fairly cheap, because the average PE ratio on the NGX is around 8 times earnings or so. So if you look at all the banks, in fact, I have a video on the Focus Bank coming out tomorrow. Table is done. A lot of them are trading well below the NGX price to average PE ratio. But let's look at book value. Market cap 772 billion. Let's see if we can work out the book value for this stock briefly. Equity is 512. So 772 market cap divided by 512 equity. That's about 1.5 times 1.5 times book value. So it's not cheap, but it's not overly expensive. I think overly expensive will be maybe trading at what? 2 times book value. It's just about 1.5 times book value. So would I get in at this point? No. But is it expensive? No. Because if you're looking at earnings per share, I mean, this is a stock that will probably end the year with somewhere, worst case scenario, end the year with between 10 to 11 naira in earnings per share. And the stock is trading at 19 naira. So that's fairly cheap. And if you assume that, look, earnings per share is going to be constant, I'd say maybe what, 10 naira, or let's even say 7 naira earnings per share constant year in, year out. 20 naira stock earning 7 naira every year. If it does that in 3-4 years, you probably recover your earnings in 4 years, or your investment in 4 years. So it makes sense from that perspective. So I'm done with Zenith Bank, Wema Bank. And let's go look at Zenith. Zenith is on my radar, I think, as well. Technicals say sell, strong sell. In fact, RSI says oversold. So clearly, from an RSI perspective, correction is kind of expected for this stock. Moving averages also sell 5, 10, 20, 50, 100, 200 day moving averages. or say sell. Shout out to Senko, by the way. I think at some point in time, I'm not sure how we're going to do it, but we'll probably need to get Crypto Senko to come on the channel and do a deep dive form of technical analysis. I know he has it. I've been telling Senko, by the way, to set up his YouTube channel and do some technical analysis. So Senko, I'm sure you're going to watch this video. Shout out to Crypto Senko. I have the time, 5 minutes in or so. So anyway, let's go look at it. Let's go look at the fundamentals. I want to see if I can wrap up this video by 10 minutes to go. It has to go out by 9:30. Q3 numbers. Let's look at earnings per share for this stock. Q3 earnings per share, or 9-month earnings per share 18.6, Q3 earnings per share is 5.6. So you can assume that this company is going to end the year with 25 naira, 20, let's even say what, 22, 23, worst case scenario, 20 naira in earnings per share. Book value of 4.7. So we'll go to the maths. This is a stock trading at 60 naira, making 20 naira in earnings per share. I mean, by all ways you can look at it, the stock is clearly undervalued, because if you assume that steady run rate is going to be 15 naira in earnings per share every year, or even say 17 naira, even if you say 15 naira earnings per share every year, 60 naira stock making 15 naira in earnings per share, again assume that you're going to get maybe what, 5, 6, 7 naira dividend per share. It means that in 7 years time you've probably recovered your investment. It's very likely things are going to accelerate as well from an earnings perspective. So clearly, fundamentally, PE ratio wise, it's cheap. But let's look at book value. Market cap for this stock is 2.4 trillion, right? And the book value is what? Book value is 4.7. So price to book value 2.4, I think. What do I have? 2.4 divided by 4.7. What that tells me, it's trading about 0.5 times book value. I mean, it doesn't make sense. So clearly, I think people need to just overlook the macro factors, worries about CGT, even though that's a headache. Worries about CGT, US, Nigeria tensions and all that. Stock is trading at 0.5 times book value. Big 5 bank in the country just doesn't make sense. I think at some point in time this stock will reprice. So that's, I'm done with Zenith. Let's go look at Oando. Strong sell. Sell. RSI says sell. Okay, 5-day moving average says buy, but 5 days is too short. And when we say moving averages, it means you take the average, take the price, and you then sum up. So that way you get an average price over the last 5 days. 5, 10, 20, 50, 100, 200. That's what it means by moving average. And then you have two types of moving averages. You have simple moving average and exponential moving average. So simple average is a simple summation that you do. While the exponential moving averages focuses on recent prices and all that. So let's look at fundamentals. Let's see if we can go that quickly. Do I have the time? Okay, I want to wrap up this video in 10 minutes. So I still have about 1 or 2 minutes to go. Oando. Is there anything out of the world I need to know? Last price 41.5. Oil and gas firms are kind of complex to analyze, you know. Ideal way to analyze this is you kind of work out what is the total reserves that they have at any point in time. You multiply that by the current price of crude oil, and then you kind of do your numbers from there. Shout out to Zero COGS, by the way. So it's a great oil and gas person. So what do we have? 9-month revenue is looking like 2.5 trillion. Profit after tax 201 billion. It's rather tiny. But you have to strip away some things. Finance income 368. That's, I wonder what's the source of that. So if you strip away the 368 from 201, or even if you strip it from the profit before tax, Profit before tax actually is 19.4. You have a tax credit and all that. So really, strip away the one-time items, strip away the tax credit, strip away the finance income, and this firm probably has recorded a loss. But my problem with Oando really is that from a balance sheet perspective, um, the balance sheet is quite poor. Can I get to the balance sheet? So what do we have? This is 9 months 25. 6.7 trillion total assets, PPE 3 trillion, intangible assets 1 trillion. That's huge. I think you actually should strip away the intangible assets for this firm, so it comes down to like maybe 5 point something. So 6.7 trillion in total assets, 6.9 trillion in total liabilities. Current liabilities, what do you have? 4 trillion. Non-current liabilities 2.9. So I think obviously means that this the negative book value, slightly negative book value. They need to raise money. Retained loss of 262 billion. I mean, the balance sheet of this firm is poor. I don't believe in firms with poor balance sheets, especially an oil and gas firm. So it's a no for me. I don't see anything here fundamentally. Not interested in this at all. So I mean, but from a technical perspective, let's see if we can work out what is 52-week low. 52-week low is 35.75. 52-week high is 78. It's close to its 52-week low. It's like 6 naira away, 6 naira and 6 naira 15 kobo away from its 52-week low. I think mid 30s to me from a technical perspective. Once this stock actually maybe what 35, 37, 39 technical angle, then maybe you might see a rebound. But fundamentally, there's nothing to see in this stock. So that's it, ladies and gentlemen. See you at market close.